All right, guys, good afternoon. This is Christian from Hertz Tribeca Trade Group, and it is April 1st, first day of the month, and a pretty nasty way, I would say, to start the month here. With SPY down 4.5% for the day, Qs finished down 4.25. I'm actually surprised. I felt like the Qs were getting hit more throughout the day. Maybe because they took out the low of the day faster than SPY did in the afternoon. IWM absolutely got small caps absolutely got smoked for the day. Bonds were stronger for the day, but you could see they actually gave back some of the day's gains. Let's just put this in red here for just so I have that noted. But you could see there was selling, in the indices as well. You could see IWM fell the most throughout the day to finish down 6.8%. Again, and so here's where probably was a little bit misled there by the overall performance for the day because the Qs did fall further than SPY for the day. Gold did okay for the day, up 1%. The VIX, I'm going to talk about the VIX in a minute, but that was up 6.5%, but didn't really go screaming higher until the last couple hours of the session. For the in the morning, the VIX was kind of flat for the day. But I have a chart to kind of discuss with you for the VIX. This is something that I put out on Twitter a couple weeks back, I would say. Sector performance, just a lot of things got hit pretty hard. The gold miners did fare better. They were up 4.3% for the day. So if you played those today, congratulations to you. Home builders, the banks, those all got hit really hard today. I'm sorting by the overall performance for the day in this column, but you could see home builders were down 8.2%, and banks again kind of resumes their move down. The semiconductors were down 5%. I think we started to notice that the semis were getting hit. Uh, they were showing some really nice relative performance. I think until about I'm getting my days confused. I think Monday we may have seen a reversal day in the semiconductors, and that's now kind of a little bit of an issue, and I think that'll be something interesting to watch. I think the semis have done a pretty good job leading, on the move up. Utilities got hit hard today; they were down 6%, and just a lot of things. Biotech down 5% for the day. The FANG stocks were down 4% for the day, so a pretty decent washout day. One of the things that I realized earlier too is that the FANG stocks, which have been holding up pretty decently, those got hit hard today, with Apple getting hit the hardest, down over 5% for the day, and Facebook, Google, Netflix tried to rally in the beginning of the day, failed. But yeah, Google down 5%. Google has been trying to kind of move a little bit higher, and then obviously got hit hard today. So what does this mean for the market, right? When you see a day like this, so let's go through a couple of the indice charts first. Let's start with the. Why don't we start with the weekly chart for the Qs? I don't know why we'll start with the Qs, but I think just the Qs have been a little bit cleaner and analysis. They've been performing a little bit better. They are still stuck in value. Notice that they retested this top of value earlier in the week, right, and basically failed. That was 9 handles higher. That was at 195. Some people I also see kind of drawing a trend line in here, right? I use value areas that told us everything that we needed to know. You can draw a trend line in there too, but that 195.61 is a barrier to be retaken. So I guess you could say first attempt to reclaim it was failed. But again, I wouldn't make too many overall, conclusions. I've been talking about basically taking this market one day at a time and just realizing, where things are, where your support is, where your resistance is. I think also, if we look at the daily, we talked about the 20-day moving average in the S&P chart. We paused there as well. So a couple of things kind of lined up, right? That 20-day moving average, I think, was telling. A lot of people use that as kind of like a overhead resistance, to kind of break a trend. So we have not broken the downtrend, right? We tested it, and for now, we failed. Where could we be getting to? So if we look at the 1 hour chart, again, 1 hour charts really kind of give me right a good view. So again, there we were kind of sitting above value for the beginning of the week, and we fell into there yesterday. And since then, it's been a hard move down. Support is down at 174, excuse me, 177.44. So we're not quite there yet. I realize this, because the market does when you have something like this go on, it's a fast move, right? And it's tough to get your head around, how quickly we're moving. It did feel like today was resembled, days from a couple weeks ago, right, where you're just any type of attempt to go ahead and reverse, the move for the day gets hit hard with resistance, and that's what we basically had today at 11 o'clock. We had tried to basically bounce and we failed. And it's not only, and this is what resembles a couple weeks ago, is not only like do we fail, but we completely change directions, right? So here on the 5 minute bar, this is very similar on the S&P chart too. We kind of hit this trend line, right? If you bring in a 200 period moving average. A lot of times that will act as like a barrier. It ends up being. I know some people like to use like a VWAP indicator. What helps for me is just you plotting a 200 period moving average, because it actually it does a really good job at defining the trend for the day. Notice we didn't even get back to the bottom of value, but there it was. And again, it's not just like, oh, we're failing to bounce, and we don't have enough strength. But not only do we failing to bounce, but then it's a complete reversal in direction. And again, that reminds me of, what we saw a couple of weeks ago, because we saw that a number of times. Like any failed attempt, and the market would get smoked for the rest of the day. And any other type of bounces would get hit pretty hard. There was, at the end of the day, you could see, some green bars were actually coming up a little bit from the lows. Like I don't think that's anything to really get too excited about, in my opinion. I think some shorts maybe covering there at the end of the day. So that's my guess. We saw that a lot on Fridays as well in weeks past, where all this, like the last 15 minutes, we would see some green bars. But I do think sometimes that's the shorts covering for the day, because they don't want a lot of exposure either. So again, one it's just basically one day. Again, one day is not a trend, but I would watch these levels, and we could look at the S&P too. But I think you let this play out a little bit further. You can take some shots on things, but you have to be really quick. So I've been, kind of resuming the day trading. I added an SC January position, C limited. The China names were showing some nice relative strength in the morning. It doesn't even feel like the same day, to be honest. But the China internet names at one point were green, I believe, on the day, and and they ended up getting hit pretty hard. Not getting hit pretty hard, but the strength got washed out in those names. So here's what the S&P looks like. Very similar. This kind of came into that 200 period moving average. We didn't break into that, but you could see that we were kind of met with some decent selling throughout the session. So I'm not 100% sure if we're going to make it all the way back down to 2283, but it'll be something to watch. I think the Qs have a better chance to get down there. So interesting, that kind of fell right into that 200 period moving average. So how did I trade today? Probably is not as good as what I would have liked to. I think just trying to recognize what is how this market is behaving for the day. One thing that I need to get better on, that I need to get better at. And again, there's always things to improve your trading. It doesn't matter what your skill level is. But just recognizing that we had a downtrend for the day. I played some things to the long side in the beginning of the day because it looked like we had some momentum. We saw some, a little bit of call buying going on as well. This AMD trade was perfect. I think I played that really well. I didn't get the overall high side in this, but this was a perfect move through value. And again, the value areas gave you a perfect area to basically say, hey, this was an area for me to take it off. But I took this trade off in here, I believe, for the day. So I didn't get the full, the full move. But what's really nice about, again, the value areas is it tells you, where, basically where you do and where you don't want to be putting on a trade. Right. So, looking for a move through value, which is known as the 80% rule, that worked perfectly. Sorry for the that was not the 80% rule. I'm thinking of another stock, but a move right into that bottom of value resistance was perfect. And then you could see that this also got me interested as well, was that we got into value on the 1 hour. So again, you kind of I bounce back and forth between the 5 minute and the 1 hour to see where there's resistance, but that worked wonderfully. The other one that I was thinking of, the 80% rule, was Ring, RNG. This started the day below value, and it made its move all the way through, through value. So that was a nice scalp trade as well. And then I kind of got caught in a couple things, right? So I kind of went from really good to not so great. I was looking at Home Depot. Home Depot was fine. I just gave myself kind of a tight stop. I just didn't want to really get caught in this market if it was going to sell off really hard. But Home Depot might set up for tomorrow. It did come into this support. I just really didn't want to hold it all the way down to 175, and I didn't want to hold it overnight either. So I stopped myself out of that trade. Clorox was a small winner on the day. Peloton, I took, thank goodness, took a target in this one. It's still holding in here. Let's see if it managed. Well, we'll have a new value area, but let's look at Peloton on the. So again, didn't close on the highs, but it looks like we did close above value. So I stayed long this as well. This was a day trade. I took one target, but I kind of want to hold this because I've been watching this one basically every day for the last 3 or 4 days. So I did hold on to to this one as well. So that's the day's action, and again, recognizing where there's resistance for the day, and also what the short-term, intermediate-term trend is. For now, I think we did. You have to kind of throw in the towel in terms of the bounce, and say that it got firmly rejected at the 20-day moving average, and let's see where we go in the next couple days. I think there's also a lot of negatives, on the tape regarding, the administration talking about how it's going to be ugly for the next 2 weeks. So, as we've been saying for the last, several weeks, take this thing day by day. Realize that there's really great trading opportunities. You just have to be open to trading both sides of the market, and we'll kind of go from there. I did want to go over my March performance, right, and performance year to date in my trading account, and also the tactical portfolio. So I had to wait for E-Trade because you have to wait till the following day before they put this out. But here's my performance. Again, try to be as transparent as possible. I did have a positive month for March, so how did I do that? Considering I really probably started off on the wrong foot. I had to just take some lumps in the beginning of the month, right? I had some option trades on. That's what plagued me in February as well. I had some long call positions on. Those basically, everything that expired that I was holding that expired in March and February and March, those call positions, those kind of all went out. Basically worthless. So I had to work my way kind of out of a hole, if I'm remembering correctly. But just day trading, I've really, talked about for the majority of March, in these end of day videos and in the trading room, talking about where there's opportunity. And I could tell you again, this is one of the best day trading environments I've ever seen before. And again, you have to be able to trade both sides of the market a bit to capitalize on the volatility of both sides, and that really kind of saved my month. And I really switched from being a swing trader to a day trader, and trying to perfect that as much as possible. I certainly didn't hit every trade perfectly. I didn't make every move, but what helped me is being super disciplined, right? So it wasn't like, I caught I did a tremendous job, finding every single name that moved. No, I missed a lot of names that moved. But what I did was just trade really disciplined. So meaning every time I put on a trade, I got my stop price out there, where it's not going to work, and basically, had my targets, set up of where I'm going to take this. So just pre-planning trades, as always, doing homework at night and finding, as many opportunities as I could, and that got me back to, to positive, and for year to date, I'm okay with that considering where the S&P is. Where's the S&P year to date at this point? Let's see where we are. Right. So again, this is my trading account. Obviously very active in that, actively managed. I either swing trade in that, or swing trade and day trade, and it's that will change. That ratio of what I do swing trade to day trade will change based on the market conditions, right? And again, I've talked about that for a while. So we're down 19% for the year, which is ugly, ugly, ugly. So I'll take that, up 15%. Versus the S&P down 19%. My other account, right? So this one is more medium term. So we'll talk. That's the good, is the trading account. The tactical portfolio, you could see how this is performing. Again, this is completely TTG portfolio. Let's bring up this, and you can click on this, right? And here's the motif. Oh, I forgot to go over the VIX. I will go over that. You could see the daily. You could see I am outperforming the S&P, but I'm not crushing it in this account. So this is something that I'll be looking to improve on. So again, from when I started this thing back in August, I started underperforming. The blue line is the motif. And then I basically caught up to the S&P, started to outperform in the beginning of the year, and I've been outperforming since. But I've got 20% cash right now in this thing, and perhaps I should have left it. I had at one point moved it more into cash, and then I kind of got. I moved it back in, basically to the market. So it is what it is. This is outperforming, but not nearly as good as my trading account. All right, guys. So that's it. What do we got here? Fed temporarily excludes Treasury deposits. Excludes Treasury's deposits in leverage rule. So we'll have to see what that means. So here's what I was talking about with the VIX, right? So the VIX was not, raging like we saw it back in. But again, so before I move over to the VIX analysis, but yes, it's important to go over your monthly performance. It's important whether or not you had a positive or negative month. It doesn't matter for April. It doesn't matter. Wipe the slate clean. I always like to talk about my buddy Bill Belichick. He's not my buddy, but I like to I like to take his lessons away. Right? He's not the most interesting coach in a press conference, but every week, right, in football, Bill Belichick, head coach of the Patriots, every week when they ask him, hey, do you think you're going to make the playoffs? We're going to take this. We're going to take next week. We're going to take it 1 week at a time. Our next opponent is this, right? So your opponent right now is April. Your job is to finish positive for the month of April. Forget about the rest of the year. Put together, get in the win column, right? And that's the same goal for me. Forget about what I've done year to date. My goal is to have a positive month and have a nice positive month for April. Any way I can get there. Right. So again, win 1 month at a time, just like Mr. Belichick is focused on one opponent at a time the very next week, right? In terms of football language. Yeah, so here's what the VIX did. Kind of lackluster, right? Up 6.5%, but didn't make a higher low in here, or a higher high, I should say. One of the things I would point to is this chart that I put out here. When did I put this chart out? This was on March 22nd, so not that long ago, right? And again, I hate these comparisons to 2008 because this is not 2008, right? This is a completely different animal, right? And people are, oh, well, this took so long in 2008 for it to work out, right? Well, that's a completely different circumstance. So you can rely on some lessons, right, from 2008, just like I'm going to be talking about one. But I really, at this point, I think people trying to compare what went on, and there's a whole different course of events that shook out in 2008 and 2009. So please, like, if you're going to reference it, think about some of the lessons that you could learn, but don't say like, oh, this correction is supposed to last this long because 2008 and 2009 it took months for that to, every correction is different, right? 1987, right? That was days, right? And then weeks. There's a whole bunch of other different corrections. Every one is going to be different. Now, there are lessons to learn from them, but if you're planning out like on an abacus, like how long this one's going to last, I think that's not the correct way to do it, in my opinion. So this is when the VIX made a high, and the S&P was down here. It made a lower high here, and the S&P made a new low. So, uh, you know, I think really you want to look for, you want to just be kind of patient with this, right? Because we did make a new low here, and you had a divergence here where the VIX did not make a new high. So, are we at that point? Well, no, because we haven't made a new low yet. But it's something that is might resurface in terms of the analysis that we'll be doing. So I think it's too early. For now, you can kind of say, well, the VIX isn't making a new high. But I think you just have to kind of frame it in the right way and look for a bigger divergence as we come upon it. So I wouldn't make the conclusion yet that because the VIX isn't raging right now that it's a positive divergence. I think you just kind of have to let it play out a little bit. All right, guys, so that's it for today's video. Of course, everything that we discuss is for information purposes only, not giving out any advice or recommendations. The performance that I showed is not indicative of, future results or anything like that. So just bear that in mind. Have a great night, everybody, and see you tomorrow.